It's Wednesday, the 6th of October 2021. Welcome to Fear and Greed, the business podcast that sets you up for a successful day. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
The Reserve Bank might be upbeat, but investors aren't. That's our main story. Also today, New South Wales gets a new leader, the state's first millennial premier, Qantas to spend $9 billion on new planes, and a record day for COVID cases in Victoria. Then stay listening for Sean's chat to EY's Joe Masters about the Reserve Bank's monetary policy statement yesterday. Sean, the Reserve Bank has kept the cash rate at 0.1% and reiterated it doesn't expect to lift the official cash rate until 2024. It's also upbeat about the economic recovery and the labour market, but it doesn't seem like investors fully agree. What's going on?
Well, the Reserve Bank is confident the current Delta outbreak is a temporary setback to the economy, though there is a lot of uncertainty about the time of the bounce back. The bank expects the economy will expand again during the current quarter and be back to its pre-Delta path by the second half of next year. But many market economists think that perhaps they're just a little bit too optimistic. If they're right, you'd expect investors to be pretty upbeat. And they were when they first read the Reserve Bank statement yesterday afternoon. But certainly the tone of the market is still really negative, with the market ending yesterday down almost 0.5%.
There's been so much talk lately about regulators intervening in the housing market. Did the bank have anything to say about that?
Kind of. It provided a hint about what the Council of Financial Regulators, of which the Reserve Bank is a member, might do about the surging housing market. We know the federal government and regulators want to do something about it. We even know that the private lenders like Commonwealth Bank wants to do something about it. And yesterday the Reserve Bank mentioned loan servicing buffers and ensuring that they are appropriate. That means judging a borrower's capacity to repay even if interest rates double or go further. So perhaps that's what the Reserve Bank is thinking about. The Commonwealth Bank has already made a move on that front and has lifted that capacity from 5% to 5.5%. So the Commonwealth Bank expects you to be able to repay a loan even if you were being charged 5.5%, not the 2.5% you're being charged now.
All right. So how did markets perform yesterday then?
Well, after all that, the market closed lower, as I mentioned earlier on. It finished at 7,248 points, with tech stocks leading the falls. Afterpay was down more than 5%, while RBA and Xero both lost more than 2%. The tech stocks have really been hammered over the past month. The S&P ASX 200 is off about 4% over that 4 weeks. Afterpay, though, it's off 15%. Xero's off 12%, NextDC is down 17%, and Appen has tumbled 22%. Appen is now back to where it was 3.5 years ago. Overall, the tech stock index on the ASX has lost all its gains that it made during 2021. Now, a notable exception, which proves the rule, of course, is WiseTech Global. That's up around 6% over the past month. It's not just Australia. On Wall Street, the so-called FANG stocks, Facebook, Amazon, Apple, Netflix, and Google's parent company Alphabet, have all hit correction territory, having tumbled more than 10% off their highs. It's quite an incredible fall from grace. There is so much going on in financial markets at the moment, both locally and globally. Fears of inflation and high energy prices, worries about a slowdown in China, and the collapse of property giant Evergrande, COVID, geopolitical tensions, crazy commodity prices, especially oil. It's all happening in the market at the moment. And that means there's been some big swings in equity markets. A couple of asset classes worth a mention, though. Bitcoin has appreciated in recent days. It's not far off $50,000 a unit, and gold has also rallied, helping the gold stocks. In both cases, I suspect that's because of the uncertainty in the market.
So good news for crypto investors, good news for gold companies. What's happened, though, overnight in global equity markets?
Well, it was good news for Wall Street traders as well. It rebounded overnight and all the major indices are trading sharply higher. That's a relief for Mark Zuckerberg in particular, founder of Facebook. He lost about $10 billion yesterday after Facebook's share price fell 5% following the massive outage for the group yesterday morning. But its share price recovered nearly half of that overnight. The big tech company is also under scrutiny in the US Senate, with a former employee and whistleblower overnight saying Facebook repeatedly chose to maximize online engagement instead of minimizing harm to users. European markets were also much higher overnight, Michael.
We'll be back in a moment with the rest of the day's business news. Sean, plenty of stories around this morning. New South Wales has a new Premier. Dominic Perrottet overwhelmingly won the party room vote yesterday. The former state treasurer is one of 12 children from Sydney's northwest. He's openly Catholic, has 6 kids, and he's a social and economic conservative.
He sure is. It's quite a rise for the 39-year-old, who of course is replacing Gladys Berejiklian, who resigned last week. Mr. Perrottet is definitely conservative. He's against same-sex marriage and not a fan of abortion. He's unlikely to vote for the voluntary assisted dying legislation that's coming before New South Wales Parliament later this year. At the same time, he isn't a zealot, and he said yesterday he'll allow a conscience vote on such issues. Mr. Perrottet said he'd push ahead with GST and property tax reform. Remember, he's the guy who put forward the option of dumping stamp duty on properties purchased in New South Wales. And he said he'll reopen the state of New South Wales on Monday as planned. Now, challenger Rob Stokes, who won just 5 party room votes to Mr. Perrottet's 39, said the new leader had his undivided support. We wish him well. What I find interesting about all these leaders from New South Wales, Berejiklian, Barilaro, Perrottet, it's so difficult to spell their surnames.
Yeah, that's certainly right. Very interesting about the property tax reform as well, and the proposal to abolish stamp duty. Now that Dominic Perrottet is Premier, he'll obviously continue pushing that one through, and it'll be interesting to see whether other states will end up following suit. Very unpopular tax, that one.
Yeah, it's very unpopular. And what was interesting, when he announced it last year during the New South Wales budget, everyone jumped on board and said it was a pretty good idea. The plan is that you'd actually pay a fee every year for the period that you own the home. So it's not as if you wouldn't pay some sort of tax on it. It's just you wouldn't have to pay that upfront fee.
Yeah, good one. Now, Qantas boss Alan Joyce was speaking at the International Air Transport Association conference yesterday. He said the Flying Kangaroo is thinking about 100 new jets.
If you ever want to get Alan Joyce excited, ask him about planes. I know this sounds really obvious, but get him going. He is a true aerophile. He won't shut up about it. As you said, Mr. Joyce was at IATA, that's the International Air Transport Association conference. That's the big annual global conference. It's in Boston this year. He said that Qantas needs to renew its ageing fleet of Boeing 737-800s and 717s. And it looks like the newer Boeing 737 MAX model and the Airbus A320neos are the favourites. The orders will cost around $9 billion, and it will take several years to deliver. Fuel efficiency and carbon emissions will be a much bigger part of the decision-making process this time round. Most newer model planes are far more fuel efficient than earlier versions. Mr. Joyce also outlined what travel to and from Australia would be like. He said it will involve a minimum of 4 COVID tests and carrying digital proof of vaccinations. He also said the government needed to phase out the 7-day home isolation requirement before leisure and business travel really came on board.
Now, Sean, Victoria is well and truly the epicentre of the latest COVID outbreak, with the state yesterday having a terrible day, recording the worst single day of new cases anywhere in the country, 1,763.
Yes, Premier Daniel Andrews looked worried yesterday, but he remains committed to reopening the state when the vaccination rate hits 70%. That still looks like being a couple of weeks away, unfortunately. In New South Wales, there were 608 new cases recorded, which is a pretty good number for that state. And new Premier Dominic Perrottet said the state was on track to reopen on Monday after that 70% full inoculation rate had been hit. The ACT recorded 33 new COVID cases, and in Queensland there were 2 cases. And Western Australia has mandated vaccines for mine workers, which is interesting. In other COVID news, the Prime Minister Scott Morrison yesterday said he expected travellers would be allowed to visit Australia from next year. But the focus now was to get the home quarantine model up and running at scale, which will allow vaccinated Australians to come in and out of the country. And just quickly, Michael, Federal Treasurer Josh Frydenberg is in isolation after one of his staffers tested positive.
Sean, what's making headlines in today's news media?
The Financial Review is reporting that Australia's single biggest public spending program, the $88 billion JobKeeper scheme, was set up without a dedicated oversight committee. Eventually one was introduced, but the implication is that the government spent too much money without checks and balances. There are also reports that Australia's share of international students has tumbled from nearly 17% to less than 12%. That's thanks to COVID, of course, and it comes from IDP Connect. Canada is now the preferred learning destination. The Australian is reporting that there's a sweeping move by Australian businesses to curb greenhouse gas emissions, with some of the largest building materials companies, including Boral, Adbri, Cement Australia and Hanson, planning to deliver net zero carbon cement and concrete by 2050. And the Sydney Morning Herald is saying that a new federal agency meant to crack down on corruption has been blasted as the weakest watchdog in the country after an independent analysis found it would not have enough power to investigate major scandals over the misuse of public money.
Running through some of the other stories around today, reports in the Financial Times that China has started unloading a small number of Australian coal shipments despite the unofficial import ban. It just shows how worried China is about coal prices, which are at record levels. A handful of Australian cargo ships waiting outside Chinese ports since the ban came into force a year ago had headed into berth last week.
It's a really interesting one, Michael. See whether we end up exporting coal to China again. Along those lines, the Bureau of Statistics said Australia recorded a record trade surplus during August of $15 billion. Exports were up 4%, while imports fell 1.5%. Also, the ANZ Roy Morgan weekly gauge of consumer confidence ticked higher last week. That's the fourth week in a row. And the latest ANZ job ads data shows that vacancies tumbled last month. But the measure shows that the number of job ads is still 22% higher than January last year, ahead of the pandemic, of course. So far, vacancy losses have been focused in New South Wales.
Now, we've spoken a number of times on Fear and Greed to Simon Kusenmacher, the demographer, and he insists there hasn't been a baby boom during COVID lockdowns.
I respect Simon, but I'm not so sure he's right on this one.
Yeah, especially when you consider that children's goods retailer Baby Bunting, so they obviously sell lots of things for new babies, said sales momentum has improved over the past 7 weeks. Outside New South Wales and the ACT, sales were strong. It augurs well for retailers when shops do eventually open up. Same deal for lighting retailer Beacon, who said consumers are learning to adapt to lockdowns. We haven't had a huge amount of choice.
We haven't, that's true.
Now, Sean, what's the key overseas news this morning?
Well, it's been a very difficult time for airliners and it continues. I mentioned Alan Joyce from Qantas was at the International Air Transport Association. That group came out and said there needs to be an end to the wildly inconsistent COVID-19 travel restrictions around the globe at the moment. It said on average through United Kingdom airports, less than 250 people were testing positive a day. Might sound a lot, but the daily case count in the UK is 35,000, so it's not many at all. IATA said Australia had some of the most draconian restrictions, though it was pleased steps were being taken to reopen. It said international travel is still at 40% pre-crisis levels, but air cargo has recovered to beyond 2019 levels. No surprises there, given all the e-commerce we're doing. And the industry is expected to make losses this year of $52 billion and $22 billion next year. Along the same lines, Bali will open to international tourists next week for the first time in 18 months. But not for Australians, even if we could leave the country. The Indonesian government said it will accept visitors from South Korea, China, Japan, Abu Dhabi, Dubai and New Zealand. And finally, to cricket. The Ashes series in Australia later in the year. Now that is big business. Well, it's in trouble after the England Cricket Board said it would look to cancel if enough senior players pulled out. The series is worth around $200 million to Australian cricket.
Big story, that one. Now, up next, Sean, is the Daily Interview, and today you're talking to EY Chief Economist Joe Masters.
Yeah, it's really interesting. We talk about the Reserve Bank meeting yesterday. We talk about what's going to happen to interest rates, spending by consumers, house prices. Well worth a listen.
That's up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Have a great day, Michael.
It's Wednesday, the 6th of October, 2021. Make sure you're following the podcast. Join us online on Twitter, Facebook and LinkedIn, and sign up for our free daily newsletter at fearandgreed.com.au. I'm Michael Thompson, and that was Fear and Greed. Have a great day.